What is up, YouTube? Today I'm going to talk about the two trades that I took today. Both of them were winning trades, so let's go ahead and jump into it. Wow, the market is moving right now. That's crazy. So the first trade I want to talk about is actually on Nvidia. It was a smaller trade, and I have a short bias on Nvidia because of this weekly head and shoulders that we see here. And so I'm wanting to play the downside as we break down out of that weekly head and shoulders. So I'm not interested in going long on Nvidia at all for right now. And we can see on this last candle, this current week, we are sort of on that neckline, and so I'm wanting to play it to the downside. Now, if we look at where the market opened at, we can see that Nvidia actually had some relative strength here compared to the market. However, as we started to break down, I saw that the price was sort of stuck in between these two fair value gaps. This lower fair value gap is actually on the 5-minute chart. Right now we're on the 3-minute. And then this right here was a fair value gap that was on the 3-minute as well. So we were sort of sitting in between these two ranges, and as we broke to the downside, I went ahead and entered my put positions. I entered with 2 contracts and took profit pretty quickly because of the relative strength that I was seeing. As we can see, this candle here at 6.55 on the QQQ. If we look at this candle here at 6.55, Nvidia hadn't quite flushed down as much as the QQQ. So we were still sort of seeing that relative strength, and I wanted to secure profits extra quickly here in case I was wrong. So I took profits not quite at a 1-to-1, and I had 2 positions. I sold one of them at almost a 1-to-1, and then I held the second position with a stop loss at break even, which unfortunately got stopped out right here, which was the highest that it went. After that, we tanked to the downside, but honestly, with the relative strength that I was seeing and with momentum completely reversing like this, you don't want to be in the position anyways, because this could easily just rip to the upside, and then you're sitting deep in drawdown when your trade was supposed to be a winner, right? So I never want to let my green trades go red. Yes, that will cost me some potential profits sometimes, but in the long run, it's going to help me more than it hurts me. So you have to trust the strategy, and that's what I did. I stopped out for a very small profit on this one. Now, the main trade that I want to talk about today is on the S&P 500, where we saw us retesting the support from pre-market. So as you see right here, we're sort of bouncing off of this level, and once the market opened, we tanked below that level and came back to retest it. As we saw the market sort of hesitating here, I went ahead and entered my short position. I entered with 5 contracts, and honestly, this was a little bit scary to hold on to, especially when we were making these wicks right here. I believe these wicks came from oil having a sudden drop, and oil has an inverse relationship to the market. So as oil went down, the market rallied briefly, putting in these upper wicks, which probably stopped out a lot of people trying to take a similar trade. So out of my 5 positions that I had, I sold 2 of them at the candle close here at 7.55, and then I sold 1 more for a total of 3 on this next candle. Then I was holding 2 runners with a stop loss at break even, just in case we flushed to the downside even farther. Unfortunately, we got stopped out at break even, which is perfectly fine with me. We actually got stopped out here at about 8:15, so we got stopped out pretty early, and if I did not have my stop loss at break even, this is where I'd be at right now. My winning trade would be deeply negative, and it would have turned my winning day into a losing day right here. So that is why we move stop losses to break even and we take profits quickly so that we can capture a little bit of profit every single day. So that's all for this YouTube video. Click like, click subscribe, and I will see you in the next one.